Welcome back to Dinar Flash News, and thank you for joining us for what is shaping up to be one of the most pivotal discussions we have had in a very long time. If you are tuning in right now, you are witnessing a specific moment in the narrative of this currency that could potentially alter the trajectory of everything we have been tracking for years. We are looking at breaking news that suggests a fundamental redefinition of the future for the Iraqi dinar, specifically tied to the year 2025. Imagine for a moment the experience of holding on to an asset for years, relying on whispers, speculation, and unverified rumors only to suddenly be impactful with what appears to be official acknowledgement. That is the core of the story we are breaking down today. We are going to dive incredibly deep into what this announcement signifies, how it could theoretically impact the market, and what the immediate future might hold. The details here are substantial and the implications are serious, making this the exact time to pay close attention. For years, the community surrounding the Iraqi dinar has been fueled by hopeful speculation and a constant cycle of what-if scenarios, but today feels distinctly different, marking a potential turning point in that long history. There are so many long-time holders who have waited with immense patience, battling through skepticism and fatigue, clinging to the hope that one day clarity would finally emerge from the central bank and the government of Iraq. According to the latest reports, that day appears to have arrived with the discussion of a new confirmed exchange rate announcement. This shifts the conversation from the realm of hopeful thinking into the realm of tangible reality. For everyone watching this broadcast, this transition marks a psychological shift from waiting and wondering to finally being armed with what looks like concrete official information regarding the valuation of the currency. This development drastically changes the emotional and financial landscape for anyone who has been tracking the dinar, primarily because clarity breeds confidence, and confidence is the single most important currency in the global financial markets. We need to get very real about why a confirmed rate matters so much in the grand scheme of economics. A currency is not magic. It is a construct of trust combined with rigorous economic policy. When a government or central bank reportedly confirms a currency's rate, especially following significant political events, it signals to the world that they are ready to back that currency with a solid policy structure and institutional support. This announcement, therefore, is not just about numbers on a screen. It is about intent. It suggests that financial institutions and markets are preparing to realign their operations to match this new reality. The news signals the possibility of increased liquidity within the Iraqi markets, a much smoother exchange ecosystem, and perhaps greater participation from both local and international economic actors. For those who have followed the dinar, it might feel like your patience is finally being recognized by the powers that be. For neutral observers, this serves as a fascinating lesson in how macro events, political outcomes, and leadership changes can shift the financial ground almost instantly. This is why today's confirmation matters far beyond personal interests. It is a signal of macroeconomic shifts in the region. Now, we must look at what this means practically and what it might look like if things start to move in the commercial banking sector. First, we must consider that banks and exchange houses may soon begin the process of adjusting their posted rates to reflect this new official value. This could mean that when individuals go to exchange or trade within the appropriate jurisdictions, the numbers they see on the boards might start changing to reflect the new policy. Liquidity might begin to rise, meaning there are more legitimate dinars in circulation for trade, creating more demand and possibly attracting more international interest. For traders within the legal markets, that could mean increased volume and potentially favorable conditions for commerce. For holders, it might imply a window of opportunity is opening, a chance to evaluate their positions under more stable conditions. It changes the calculus from a vague maybe someday to a concrete maybe soon. The official confirmation sets the stage not just for continued speculation but for actionable economic movement. And in the world of finance, action is where things become tangible. However, it is incredibly important to note that this is likely not the scenario where values skyrocket overnight. Currency adjustment is seldom an instantaneous or dramatic event that happens in a single evening. Typically, markets absorb change gradually and in phases. There could be periods of initial volatility, testing of the new rates and recalibration of the banking systems. That is entirely normal when a major announcement like this hits the wires. So while there is real potential here, this should not be viewed as a guarantee of a meteoric rise, but rather the beginning of a structured economic process. Smart observers and those interested in the region's economics will now watch bank behavior, exchange activity, and liquidity flows with whole-like attention. They will watch carefully how domestic markets inside Iraq and global markets react to the news. Patience, the same virtue that kept many interested during the lean years of silence, will remain essential during this transition phase. This is not an overnight lottery win. It is a gradual economic shift. The smartest move for anyone interested is to observe, understand, and act strategically only when the conditions make logical sense. We must also take a moment to look at why this announcement came at this specific time. Recent political events, notably the administration of Prime Minister Sudani, have apparently created a new phase of leadership and a mandate for serious economic reform. Stability and governance often precede meaningful policy changes, including those related to currency valuation. The timing suggests that authorities might be seeking to leverage this renewed political clarity to stabilize the economy and assert confidence in the national currency. It could be part of broader monetary and fiscal reforms aimed at reinvigorating Iraq's economic infrastructure, rebuilding trust domestically and internationally, and encouraging foreign investment. If that is indeed the case, this confirmation might just be the first move in a sequence of policies. Watching developments closely over the coming weeks and months will be critical to understanding the full scope of this change. For those who have followed the story for years, the long-term believers in Iraq's recovery, this feels like validation. It feels like the moment you have been waiting for after all those times you heard soon or we are working on it now. Seeing something concrete can be emotionally powerful, but it does not guarantee immediate wealth, and that is why mindset matters more now than ever. This confirmation validates patience but also introduces a window where careful observation and strategic thinking must come into play. It may be tempting for some to want to act fast, to make moves without full information, but doing so without understanding the full market environment could be risky. For experienced market watchers, this could be a chance to evaluate options thoughtfully, considering bank policies, exchange rates, conversion fees, and international regulations. For newer individuals joining the conversation, this is an education in how markets, policy, and currency valuation intersect in the real world. If you are new to this, if you have been curious but uncertain, now is a great time to start paying attention to the mechanics of international finance. The confirmation doesn't just affect seasoned followers, it changes the entire playing field for everyone involved. Observing how banks and exchange houses respond, monitoring liquidity changes, and watching international markets could offer insights into whether this shift is stable or just temporary volatility. Use this moment to learn how currency markets respond to political triggers, leadership changes, and official confirmations. It is vital to understand that a currency's value depends on confidence, transparency, and regulation, not just rumors on the internet. Whether you are evaluating a small interest or just following the story for educational purposes, now you can watch real-time currency mechanics. Approach this news cautiously, but stay alert as this is a live lesson in macroeconomics unfolding before our eyes. We must also discuss the aspect of global perception. When a country officially reaffirms the value of its currency, international investors, banks, and financial institutions take notice. That can lead to increased foreign interest, cross-border exchanges, and potentially more liquidity flowing from overseas markets. For the Iraqi dinar, this could open doors that were previously closed or uncertain due to instability. International institutions may reassess the risk associated with Iraq, and foreign investors may explore participation in the recovering economy. Remittance and exchange flows can grow, driving demand and increasing turnover, which would gradually elevate visibility and trust in the dinar beyond Iraqi borders. While this doesn't guarantee a major surge, it does increase the chance that the dinar becomes a more actively traded unit, which is a positive sign for anyone waiting for broader recognition of the asset. Still, as with any financial or currency news, there is inherent risk. Currencies are fragile in a way. They rely on public trust, political stability, and economic fundamentals to maintain their value. A confirmed rate gives initial momentum, but what happens next is the real test. The future depends heavily on policy consistency, continued economic reform, sound banking practices, and global acceptance of the new rate. If any of those factors falter, the momentum we are seeing could stall or reverse. That is why this announcement should be seen as the opening chapter of a new book, not the conclusion of the story. For those following this, it is vital to stay informed, understand local and international developments, and think long-term. Do not let excitement lead to impulsive decisions. Use reason rather than hype. Treat this as one step in a journey, not a final destination. Let us visualize what a successful transition could look like in the coming months. If everything goes according to plan, we might see banks beginning to post updated exchange rates that reflect the new value. We might see exchange houses preparing for increased volume and conversion and transfer processes becoming more transparent and regulated. Perhaps foreign institutions will start to show tangible interest in the Iraqi market. With enough momentum, we could see a gradual climb in demand and a more active dinar market. Overall, investors might gradually regain confidence, seeing clearer liquidity paths. Over time, this could change the perception of the dinar from a speculative hold to a currency with renewed viability. That is the potential horizon, but only if the structural pieces align correctly. Of course, there could also be cautious realism among observers. Some may wait to see how banks respond before believing the change is permanent. Some may hold off until there is proof of liquidity, real exchange activity, and international acceptance. That caution is not negative. In fact, it may be the smartest approach. Watching how the first weeks or months unfold could provide a clearer idea of stability. If volatility appears or if rates fluctuate wildly, those signals will matter immensely for future decision-making. For long-term observers, measured patience might pay off, whereas for shorter-term traders, quick moves might be tempting but also fraught with risk. This moment demands mindfulness, attention, and a clear understanding of balancing opportunity with prudence. We should also shift focus to what this might mean domestically inside Iraq for the ordinary citizens living there. A confirmed and stable dinar rate could mean better predictability in daily transactions, imports, exports, and remittances. If banks and exchange services align, the Iraqi people could experience more fairness in rates for their pay and for currency exchange. Businesses might begin recalculating budgets with more clarity, and imports and exports could be priced more reliably. Inflation, which sometimes shadows currency instability, could be managed more effectively with a consistent currency value over time. This could improve trust in financial institutions, encourage local investment, and stabilize domestic markets. That is not just speculation. That is the potential impact when currency stability aligns with policy and economic practices. However, we must remember that stability is never automatic. For domestic benefits to materialize, several things must go right. Banks have to cooperate. Exchange houses must operate transparently. Regulations need to be enforced and governmental oversight must remain steady. If any of those falter, for instance, if inflation skyrockets or political instability resurfaces, this confirmation could lose its impact. That is why people who care about more than just profit, regular citizens, businesses, and communities also need to watch this carefully. Currency touches everyday life from grocery prices to rents and wages. If the system reshapes well, many could benefit. But if it doesn't, uncertainty remains. The path ahead is as much social and economic as it is financial. For international watchers and diaspora communities, this moment might also represent a renewed bridge between Iraq and the global financial ecosystem. Remittances, transfers, and foreign business all depend heavily on currency stability. A confirmed dinar rate could encourage overseas Iraqis to send money home with greater confidence, potentially boosting local economies. Foreign businesses might reevaluate opportunities for investment, and international trade partners could reassess risk over time. This contribution to rebuilding economic ties could improve trade flows and potentially stabilize economic relations with global markets. That could mean long-term benefits beyond just speculative currency trading. Benefits for real lives, real communities and real businesses, but again, timing and execution are critical. If this confirmation is merely symbolic without follow-through, it may end up being just another drop in the ocean. The difference between symbolic and structural lies in policy implementation, institutions, regulation, and public trust. So whether you are a holder, an observer, a trader, or just someone curious, you must watch closely, ask questions, follow bank announcements, follow exchange trends, and watch for global interest. Use this moment as a starting point for informed observation, not a finish line. Over the coming months, developments will show whether this is a milestone or just noise. Now, as someone interested in this story, what should you do next? First, stay informed by following official announcements, bank rates, and exchange house updates. Compare rates and watch liquidity. See if exchanges are smooth, stable, and transparent, and avoid rumors by focusing on verified, clear information. Second, think in terms of long-term potential rather than quick gains, as currency markets are volatile and short-term leaps are rare. Third, approach with realistic expectations. A confirmed rate is a start, not a guarantee. Use caution. Finally, treat this as part of a bigger economic picture where currency value is intertwined with politics, policy, banking, and global economics. Stay aware, be patient, and be ready. If you have been waiting for this moment for clarity and confirmation, today may feel like validation, but remember that validation is not the finish line. It is a checkpoint. What follows depends heavily on choices by institutions, governments, holders, investors, and individuals. This is a dynamic story, not a concluded one. Be part of it with eyes open, mind clear, and expectations grounded. Watch how markets respond, watch how policy shapes things, and watch how trust evolves, because what happens next could define the next chapter of the Iraqi Dinar story. For newcomers wondering if this is legitimate, that is a fair question given that currency speculation has seen its share of hype. However, reports of official confirmation give a starting point grounded in reality rather than just rumor. Think of it like a door opening. You can look inside, you can step through, but you should do it carefully, thoughtfully, and with eyes wide open. Don't rely on dreams, rely on data. Don't rush, observe. Don't assume instant windfalls, consider long-term value. This is how currency, banking, and markets have always worked. This moment changes the conversation, but it doesn't guarantee the outcome. As we look ahead, let's imagine possible timelines. In the short term, over the next few weeks or months, we may see banks updating rates and exchange offices posting new numbers with small volume increases. In the midterm, over several months, maybe international interest picks up and volume grows. In the long term, over a year or more, perhaps broader economic reforms take hold, trust builds, and the dinar gradually re-establishes stability and stature. But along the way there may be bumps, skepticism, volatility and delayed reforms. That is normal. What matters is staying alert, informed and ready to adapt. This is not a sprint, it is a journey. Whether you have held the dinar for years or are just hearing about this now, this announcement demands respect, attention, and careful analysis. No speculative whispers, no blind leaps, just clear eyes, steady hands, and calm minds. Use this moment to think, learn, and evaluate, because true opportunity rarely comes without patience, awareness, and readiness. This right now could be one of those opportunities, or it could be the beginning of a long road. Either way, as viewers and watchers, we all get to follow what happens next. Stick with the channel, keep watching for updates, keep checking official sources and watch bank behavior, watch exchange rates, watch global financial signals, watch liquidity, transparency, and institutional responses. Most importantly, watch what happens between now and tomorrow, next week, and next month, because currency isn't about one announcement, it is about what follows. If you stay alert, you will see whether this is a historic turning point or just a headline. Service provides an opportunity to voice any of your texts, including articles, reports, separate chapters or entire book in a sequence, no more than 30,000 characters at a time. The name of the MP3 file is formed from the first 20 characters of the text. Save the generated MP3 file to your device for storing and future use offline. Please select language and voice. Adjustable speed, pitch and pauses between sentences and paragraphs. Replace this text with yours.